Oil prices edged higher after ending at nearly two-week low. William Watts. Oil futures edged higher Tuesday morning, consolidating after ending the previous session at their lowest since August 6 in response to hopes for a ceasefire between Israel and Hamas as well as concerns over China's demand for crude. Price moves. West Texas Intermediate crude for September delivery rose 9 cents, or 0.1%, to $74.46 a barrel on the New York Mercantile Exchange. The more actively traded October contract was up 21 cents, or 0.3%, at $73.87 a barrel. October Brent crude, the global benchmark, gained 21 cents, or 0.3%, to $77.87 a barrel on ICE Futures Europe. Market drivers. Sentiment in the market remains bearish. Demand concerns centered on China continue to linger. Recent data releases reinforce the view of weaker Chinese oil demand. Warren Patterson and Hua Manthi, commodity strategists at ING, said in a note. Trade and industrial output numbers last week suggested that apparent Chinese oil demand continued to trend lower in July. They wrote, and these worries mean that speculators continue to be hesitant about jumping into the market, despite expectations for a deficit environment for the remainder of the year. Prospects for a ceasefire in Gaza also served to weigh on crude prices. Oil had rallied earlier this month on fears of an Iranian strike on Israel following the late July assassination of a top Hamas official in Tehran. Investors fear a direct Iran-Israel confrontation could pose a threat to crude flows from the Middle East. U.S. Secretary of State Anthony Blinken on Monday said Israel had agreed to a U.S. proposal to bridge gaps that have prevented an Israel-Hamas ceasefire in Gaza and pressed Hamas to do the same. Oil fell last week after an Iranian strike failed to materialize, with Tehran reportedly tying a decision on whether to retaliate to the outcome of ceasefire talks. The bridging proposal has helped ease some fears over supply risks hanging over the oil market. However, we still need to see if Hamas will accept the deal, and if we get a deal, whether the ceasefire holds, the ING analyst said. Oil prices are likely to remain sensitive to how this